Hello guys, this is Frank the Anointed FX, and this is one of our Forex for beginners, and this is Forex 101 for those that are new in the Forex place, for those that don't know anything about Forex, and this is a video I want to explain some terms you may become across normal regular terms, not all of them that are here, but these are the regular ones that you may be seeing and be asking question, what does this thing mean? What is the meaning of these terms? What is the meaning of leverage? What is the meaning of losses? What does it mean? There are so many of them which are not here, but this is the basic one that you must know. These are the basic one that you must know in order for you to be successful in forex trading, so that you know all of these ones and know what they mean and know what they do, so that we will be able to maneuver your way so well in forex trading. So without wasting much of our time, I want us to be aware that this is channel. This is a disclaimer. Presentations and writings are only for educational purposes and are not intended as a financial advice. You can implement this while trading at your own risk and after you have consulted your financial advisor. That is why this channel advocate for knowledge first before trading. I know so many traders, like even me self, I did the same thing. When we came to Forex Place, we we jump into Forex without a proper knowledge. I do not blame. We don't have even have a good knowledge that time, because what we all know then was only one strategy: support and resistance. Support and resistance. You sell from support, you buy. No, you sell from resistance, you buy from support. That is what we know, and that's what we used to start trading those days. And so many of us run away because he made a lot of sources, and so many of us remain and later find out the true analysis. When we come across Elliott, we've come across ITC, then we discover that we're not doing the right thing all this wide. So let's dive in by explaining the times so that this video will not be too long. Number one is leverage. What is leverage? When you talk about leverage, whenever you come across forest space, you will be hearing of leverage, even in crypto space, even in the Bybit, you'll be hearing of leverage 10x, leverage 5x, leverage 1 is to 100, leverage 1 is to 1000. What does that mean? What does that mean? When you talk about leverage, talking about borrowed capital, the broker or the provider of liquidity will give you a borrowed money to add to your own capital. Let me assume that you enter into forex and use a leverage of 1 is to let's say 100. 1 is to 100, but sometimes it'll be bigger than that. What that leverage of 1 is to 100, what that simply means is that your $100 capital that you deposited in that broker will be times by 100. You understand? So they will give you a multiple of 100 of that your capital. And when 100 times 100, that's 1,000. So you have $1,000. So you can trade a trade of what $1,000 with the leverage of 1 is to 100. You can trade what? Trade what? $1,000 with the leverage of what? 100. That is what leverage stands for. A borrowed capital. Every broker, every liquidity provider borrows trader capital. Be it in crypto space, you say times 5x. You are timesing your capital by 5. If you times 10, you are timesing your capital by 10. So it can boost your profit, and it can boost your loss. You understand? So if you know this thing, you know when to use a big leverage, you know when to use a small leverage. So the best thing is to, if you want to trade, use a medium leverage. Don't use big one unless whenever you want to trade, unless the setup you have captured, maybe you have, and you can use a bigger leverage to maximize. It's kind of low size. Low size is kind of a unit. We talk about low size, talk about the number of currency units to be brought or to be sold in a trade. The number of currency units. These currencies are measured in unit. The number of currency units to be brought to one lot. Use one lot size. All those lot size is a number of currency units that you are going to brought. The standard load size is 100,000 units. That is a 1.0 load. That's the biggest load, biggest load size. That is the standard load size 1.0 load is simple 100,000 units. So 0.1 load is what? 10,000 units. Then 0.01 is what? 1,000 units. So that is the load size all about. So you have to know the standard load size, know the amount of load size supposed to use in a trade. So whenever you're using one load size, use a standard load size, you know that you're trading 100,000 units of that currency pair. Maybe you are buying euro against dollar. So you are buying 100,000 units of euro against dollar. You understand now? So if you are using 1.0, 0.1, you are buying 10,000 units of that euro dollar. If you are buying 0.0, you are buying 1,000 units. So the low size is what number of currency needs to be brought or to be sold. I hope you understand that. If you understand it, give me a comment in the description below. So talking about pimps. Pimp. What is pimp? Pimp, you will hear about I made 7 pimp in this trade, I made 5 pimp in this trade, I made 2 pimp in this trade. What is that pimp? So we're talking about pimp, we're talking about uh simple, it simply means percentage in profit. Percentage in profit is a measurement unit used in forex trading. It's a measurement unit used for a percentage in profit. It's a measurement unit used in forex trading. So let's take for instance that you buy a euro US dollar at $1.32 and to $1 is difference there. One that 10 difference is what? 10 pip. Between 1.85 and 1.95 is 10 pip, and that 10 is what we call that 10 is 10 pip, and that is the unit. The difference between this one and this one is 10, Abby. You cannot call it 10 US dollar. You cannot call it 10 euro because you are trading two currency pair now. You're trading euro against US dollar. You cannot call it anyway. You call it 10 pips. The pimp is the unit, just like 10 cents, $10. So in forex trading, it's called pimps. 10 pimps is a unit of measurement. So here it's just 10 pimp in profit if you are buying, but if you sell and it go up against you, it's 10 pimp in loss. So that is all for pimp, guys. That is all for pimp. So the next on the list is called margin. Margin. I don't know, some of you will be hearing of margin or margin call. You hearing of margin and margin call. Well, this is not a big grammar. Don't be carried away. Margin, margin simply means the amount. Margin simply means the amount required to buy or to sell the currency pair. The amount you require to buy or to sell any currency pair. What is the amount? For instance, that you are buying. If you are using a demo account, maybe I started using the demo account, you can see where the right margin, and that margin, whenever you buy something, the kind of amount of money that will be in that marginal space, and the margin percentage will be reading. That money in that marginal space is the amount required to buy that currency pair that you buy. Maybe you are buying euro US dollar. Let's say for instance you funded the account $100 and you have a leverage of 1:1,000. If you are buying US dollar, the margin normally be $2 or 1 point something cent. That is what margin is all about. That is what margin is all about. So we are talking about pimp, low size, leverage. So talking about indicators. You will be hearing of indicator in foreign space. What is really an indicator? What is an indicator? What is an indicator? You may ask. Indicator simply means the tools used to predict the market direction. There are so many indicators like MACD. That is a relative index. That is a volume indicator. That is a boring sound. There's so many of indicators. That is a Fibonacci ratio. There is so many of them you can name of, and the indicators have uses. They have the way they use them. They have the time frame they use them. They have the different currency pair, they work perfectly best. So if you go deeper in Forex, you will find out those ones. So talking about currency pairs means the currency that you are trading in. Currency pair, currency pair. The currencies are not trading in one direction. You cannot be trading only euro or trading only dollar. You can only trade dollar, euro, stroke, dollar. You can only trade euro or you trade euro, stroke, Japanese yen, or you trade dollar, stroke, Great Britain currency pair. So the currencies are traded in pairs. They're not traded in one part. So they are traded in pairs. So so whenever you are trading, you will require to choose a currency pair, an instrument you are trading. Not only currency pair are traded in forex or in the trading as a whole, cryptos are traded in pairs. You can see Bitcoin stroke USDT. Even in the stock market, you will see S&P stroke dollar. Everything is it's traded in pairs. Either you are buying dollar and selling those pairs, or selling the other one, or you are buying the other one and selling the other one. So if you are, assuming you are buying euro, US dollar, you are just what you are just doing is you are buying euro and you are selling dollar against dollar. And whenever you are selling euro US dollar, what you are doing is you are selling, yeah, you are selling euro and you are buying dollar. So that is what it simply means, and that is what the currency pair is. Data. So that is economic data. Uh, what an economic data is, a kind of a news flash. Those news flash normally make some noises, some movement in the market. Like if you have been coming to forex space as a new person, say new baby, you will see some change. Maybe in the American section, you see some trade jump up like 500 pim, 50 pim, 100 pim in a sprinkle of a time, in a seconds, in a split of seconds, in a split of minute. You'll be asking, what is this happening? It's because there's an release of an economic data. So whenever economic data is released, the news tend to react to it. You understand, guys? So whenever economic data is released, there's tend to be a reaction. And okay, let me show you an example of economic data. Let me show you here. This is example of, I think it's here with me. This is the economic data I'm talking about. You can see the economic data I'm talking about. This is the Monday. This is the news concerning Hero. See the news? This is called CPI flash estimated. So market is forecasting that it's going to be 2.56. Actually, it came above the market forecast at 2.6. That is a good economic data. It symbolizes that the news is good news, and that news will trigger investors to start buying euro against dollar. So the same goes with all these economic data. Let me refresh this page. I think there's some economic data supposed to have shown today that have not been shown. You see the dollar economic news that is there. You can also see dollar news of service PMI. So all those news moves market. They move market. They make some noise in the market. They make some changes in the price movement. That is all for economic data, guys. Our chart. So talking about that one is dealt with. Talking about the buy limit and sell limit. Buy limit is a kind of order. It's a limit order set in a Meta 5 or your trading platform where you say that this price come to this place. Like let me take this as example. This place is now 177. So you may decided to mark this 177, this 177, and say if price come to this 177, I'm going to buy. Because you may not be available at that moment, you decided to set a limit order there, placing the price there, placing there. So once price come, whenever even if you're not around, it comes here, it triggers your buy limit, and when it goes up, you start making profits. That is limit order. The same goes to sales. Maybe you wanted to sell at up here as 120, but you don't know when the price will come there. You place your sell limit. Once price get there, you trigger the sell limit while the thing drop down. So that is what the limit order. So talking about take profit, and this SL means stop loss. Whenever you are trading, and you know that trading comes with a risk, it comes with a very huge amount of risk. So whenever we are trading, we try to minimize the risk by placing our stop loss. You understand? You place your stop loss to minimize your risk. Let's assume you place a buy limit order and you don't want the price to go below 115. You can place your stop loss at this place. If the price come here and did not reverse and come back, let it close by itself. You take small loss. So if price did not reverse from this place and came down, you can take a substantial loss instead of you blowing your account. If you don't have a stop loss, price may continue falling, 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 and falling, and thereby rendering your account useless. You blow all your money account, all the whole cash in your account will wiped out. So that is why stop loss is needed. And stop loss is also used to wage profit. Let's assume that you have already entered a buy here. You entered a buy from this place now, from this very place, and you move up to this place. You can take your stop loss, block it here, and block some profit. That is what they call break even. So that even if the price eventually did not meet up to the place you wanted to come, and they come back, you won't be in loss again. Instead of you gain small something. The same goes with take profit. It's an order place where you want the price to terminate. Maybe you are buying from, I want the price to terminate here. You can place your take back in your profit. So this is the major terms. We have something like brokers. What are brokers? Brokers are liquidity providers. They provide you a platform to trade in a bigger trading space. Forex trading is trading in the 5 trillion market. So your small $100 cannot do anything. But the broker give you their privilege. There your small dollar, $100 can be part of the trading. If you know what is happening in the trading market, you can have a small dollar can turn into $1 billion in a space of 6 months or 1 year. So that is what broker does. They provide liquidity and they charge you commissions. Commissions maybe in terms of dollar, commissions maybe in terms of spread. So it depends of anyone in terms of inside of it. That is broker. And I also have prop firm. Prop firm. Let me include them here so that you will see them. Let me include them. Broker and prop firms. Prop firms are individual companies. A firm, what do? They provide traders with good skills, capital to trade. So if you believe that you have skills to trade, what you need is to go to prop firm, purchase one of the biggest capital they have, pass their evaluations because they have the perimeters which you must trade within. When you pass, they give you a live account of that bigger amount where you can make some withdrawal. Okay, guys. So right now I'm trading with this prop firm called Right Funded Prop Firm, where I'm still in evaluation two. I have not passed the evaluation two, but hopefully before this week runs out, I'll be through that. So that is all for prop firms. So brokers, you have not brokers. This is prop firms. That is all you need to know in a forex space. There are other ones which I cannot be mentioned in this video. I don't want the video to be too long, but these ones are the basics ones that you know at the back of your mind before you venture. Maybe you decided to go in to trade this trade. Maybe you decided to trade forex in the future. We have our academy. We have our academy, which is I want to show you now. Well, this is the academy, Frank the Anointed FS Academy. So we simplify trading. Here in the academy, what we do is to pass you knowledge. Knowledge. Number one knowledge is risk management. When you know much about risk management, then you can know what to do, how to manage your money, how to manage your risk in trading. Number two knowledge is to give you a powerful trading strategy, technical strategy that you can never miss. In my trading, I combine so many strategies like chart patterns, Elliott wave, number one, and then ITC for my entry. So this is a three basic strategies that I use and are very top notch. This is my 80 tops. So it will be imparted on you, not just teach, it will impart it on you until you become a master. So if you want to join this academy, you can contact me on the number in the description of this video or on the screen of this video. You also have Telegram channel where you can join us in Telegram channel and be part of the community and see whenever we analyze trade, you see what we analyze, see where we analyze, see the result of the trade. So thank you all guys. I think this is here we sign off for this lecture. And this is where we sign off for the lecture. Okay, see the Telegram channel that I'm talking about. The Telegram channel. This is for VIP. And this is our community Telegram channel. You can see all the trading that we are taking there, all the chart pattern. This one is already moving up, and you can see all of them there. I think that is where we'll wrap up this video. Remember to subscribe to this channel. Remember to give this video a like, and then thank you for your time. Bye for now.